Africans have been feeling financial pressures in recent months with interest rate increases to curb stubbornly high inflation as food prices rose the highest in 14 years. Now, to rub salt into the wound, motorists were slapped with a 37 cents per litre petrol increase. Well, let's discuss this further. I'm joined by Annaline from Debt Rescue. Annaline, very good evening to you. Let's talk about the latest petrol hike in South Africa, and it's likely to put additional financial strain on motorists already facing a wave of living cost increases. Now, as Debt Rescue, can you share your insights into how this increase will impact consumers and certainly their ability to manage their debts?
Good evening, and thank you for having me. Well, indeed, I mean, we have to understand that, obviously the moment that the fuel price goes up, whether it's petrol or diesel, or in this case both, you have the direct and indirect impact. So obviously, when it comes to transport, when you're filling up your vehicle, making use of public transport, the costs of that are going up. And indirect, obviously, the majority of goods in South Africa are transported by road, which means that those goods' prices are going to be pushed up accordingly. But it's not just that. We know that consumers have also been hit with relentless amounts of interest rate hikes because of inflation. So on one hand of your budget, living expenses are going up, and on the other side, your debt repayments are going up. So it's really been a massive situation that consumers are finding themselves in.
So let's talk about the long-term consumer effects. I mean, you're talking about consumers that are struggling, and then on top of that struggle, you then get these continual hikes in petrol prices, which, as you say, will trickle down across many, many platforms.
Well, indeed, and that's the predicament that we are really sitting with at the moment, because we have to look at obviously our domestic situation as well as the international one. I mean, from an international perspective, we know that the intention of OPEC, they announced this 2 months ago, is that they want the oil price back at around $100 a barrel. It's currently sitting in the $80 range. So we're not even near where they want to be. So even if our rand holds steady against the US dollar, the petrol price is most likely going to continue going up. If we're lucky and the rand strengthens, it might stay the same or maybe even reduce. But realistically speaking, from a consumer perspective, there's not much light at the end of the tunnel in the short term. There's no specific indicators that are, telling us that things are going to change. And we have to remember that the Reserve Bank governor did indicate that by no means does this indicate the end of the rate hike cycle. It just means for now they are pending it. So it's really a wait-and-see situation out there.
Well, the irony of this situation is that the more pressure that consumers feel with debt, the more business that you get. How's it looking for you? Are you seeing an influx of people that need debt rescue?
Well, indeed, absolutely. I mean, it's not good for the economy, obviously, when consumers become over indebted, because it means they cannot spend, because obviously we need consumers to be spending money to, stimulate the flow. But realistically speaking, consumers are struggling, and we know this has been going on for quite some time. It started pre-pandemic, but obviously when we had the COVID pandemic, it really made it worse. We hoped it was going to get better from a consumer perspective. But then shortly after, we started seeing the interest rate hikes, inflation increasing, etc. So consumers are in a very, very, very difficult situation. Most of them have cut back where they possibly could. But there's only so far you can cut back realistically. And then if you sit back and you say, my debt repayments are increasing as well, we are really sitting with a situation of consumers having to turn to credit to put food on the table at the moment.
So let's talk about some of those solutions. Obviously, getting more credit is not a good thing. I mean, we talk about getting into more debt is not a good thing. There is good debt and there is obviously bad debt. How are people dealing with these situations, and what are the recommendations that you would give?
Well, the reality is I think many consumers are not sure what they're supposed to do, just purely from a perspective of everything has been so uncertain for the last few years. Like I said, started with the pandemic, our jobless rate, our unemployment rate being as high as it is. So consumers are really stuck in can it get worse? How much worse could it potentially be? And my advice is that consumers really, really have to plan. They have to go back. They have to look at their financial situation. They have to look at where their money is going, where the opportunities are to cut back, make changes, etc., in lifestyle, etc. And then obviously go and look at your debt elements as well. Try and pay off the smaller debts if you can. Do not turn to debt to make it to the end of the month. If you're having to do that, you're potentially over indebted and you could find yourself in a massive debt spiral. So if you've done all these changes, look at debt counseling as an option, because obviously it's there specifically to protect over indebted consumers, helping them repay their debt, but still affording their necessary living expenses.
Now, how important is it to be able to forecast? Because I'd imagine a family would sit down and say, we're in a lot of trouble, we're in debt, let's cut back, and cut back to a particular measure. But the next day, the fuel price goes up, the Reserve Bank governor decides that the minimum lending rates are going up in that regard, and all costs are going up around you. So it's almost like you come up with a plan, and 6 months down the road, that plan ceases to work.
Well, exactly. And I think that's why it's so important that firstly, when you set up your plan, that you are very realistic about it. So in other words, don't think you are spending X amount on food, for example, or Y amount on transport. Go and see what you really spend. Because if you are busy with your planning and you are guessing what it is, you are almost inevitably going to fall short in some way or another. And then secondly, while you are part of your planning, always leave provision for the unexpected. Nobody expected the interest rates to go up by as much as they had, absolutely. And we know that inflation finally is within the benchmark levels that the Reserve Bank wants, but they have to remain there for a while. So when you are doing your planning, leave that bit of saving for the rainy day. Make the changes where you possibly can and put that money away so that in the event that, we see interest rate hikes, that you have that bit of flexibility in your budget where you can say, okay, I might not be able to save anymore, but I can at least afford these increases to the degree that they are happening. And if needs be, go back to the drawing board. Remembering a budget is not something that's cast in stone forever. It needs constant revision. It needs constant comparison with what's happening out there in terms of economic factors beyond your control.
Now, reading into the report, it says that many people are downsizing. Motorists, as an example, downgrading to smaller vehicles. But the challenge also is that the used vehicle market prices are skyrocketing.
Indeed. And this has been a very interesting observation, and I think perhaps to a degree unexpected, because what's happening is the demand is so high at the moment in the second-hand vehicle market that there are less vehicles available. People tend to be holding on to their vehicles for longer than they did in the past because they can't necessarily afford to, do the upgrade that they would normally have done after a certain amount of years, etc. So, you have a demand-supply situation. Demand is higher than supply. There's less stock available. So, it's pushing up the prices of second-hand vehicles, which obviously, if you're planning on selling your vehicles, probably a good thing. But realistically speaking, if your plan is to downscale on perhaps from a more expensive vehicle to a cheaper one, that cheaper one might not be as cheap as you had thought it would be. And you might also sit with the case that the vehicle might become older because there's less stock available. So the vehicles that are out there are not going to be as new as you'd hope to perhaps purchase. So it's been a very interesting observation.
Annaline, finally, give us your observation on the quality of life that South Africans are living, certainly where it's gone from 2 years or 3 years ago to where we are at the moment.
Difficult, incredibly difficult. We just recently did a survey specifically for Savings Month, just to get an idea of what consumers are facing out there. And 65% of the participants in our survey told us that they have started skipping meals. They've actually cut down on a meal a day to try and save costs. More than 70% have told us that they are turning to cheaper alternatives to stock up their meals, which are not necessarily as nutritious and as healthy, and especially if we're talking kids. So consumers have already really, they're feeling the pinch and they are starting to make decisions, but it's affecting them in an incredibly negative way at the moment.
Annaline from Debt Rescue, appreciate your time this evening.